Good morning, Ian Cooper here. Hope this finds you well. I must sound like a broken record at this point, but markets are still a mess. We have a weak dollar and a trade war that's getting a bit out of hand with no real end in sight, at least for the moment. Also, part of the pullback is because of this idea that President Trump could fire Fed boss Jerome Powell, which creates even more uncertainty. It's why Dow futures are down another 331 points. This chart on your screen right now is from Friday's close. Nasdaq futures are down 251 points, and S&P 500 futures are down about 57. Meanwhile, the volatility index is back above 31. Again, the chart on your screen right now is from Friday's close. The good news is there are still opportunities to be found. In fact, one of the standout opportunities in the market is still gold, which just hit a record high above 3,400. With the trade war and a weaker dollar, we really wouldn't be shocked to see gold challenge 4,000. And one way to trade that potential upside is by buying to open a small position in the Newmont Corporation NEM May 16, 2025, 55 calls at market this morning. Where with this one, we're kind of just looking to jump in and out of the position quickly. Technically, Newmont is a bit overbought, as you can see on the chart on your screen right now. But with gold showing no signs of pulling back, Newmont could continue to push a bit higher. Again, all we want to do is jump in and out of NEM. At some point, gold will be a great short bet along with gold-related stocks like NEM and GOLD and some of the major gold ETFs. Also, with substantial amounts of chaos priced into the markets, it may be time to look into buying the excessive fear. For one, we have to remember that markets are resilient. They've bounced back from far worse situations. Also, remember that Warren Buffett tells us to be greedy when others are fearful, and fearful when others are greedy, which kind of fits the mold that we're seeing today. Baron Rothschild tells us to buy when there's blood in the streets. Sir John Templeton would tell us to buy on excessive pessimism when others run scared. That time to buy may be now, especially before market conditions and investor sentiment begin to show signs of improvement. Our goal would be to buy in before the herd wakes up to a long opportunity. Now, one way to trade a potential rebound in the markets is by betting on the short side of volatility. Now, we can do that with two different ETFs. The first one, SVXY, or the ProShares Short VIX Short-Term Futures ETF, seeks daily investment results that correspond to one half the inverse of the daily performance of the S&P 500 VIX Short-Term Futures Index. That ETF also has an expense ratio of 0.95%. Now, with SVXY, we can buy the ETF and or we can buy to open the SVXY May 16, 2025, 35 calls at market this morning as well. We can also take a quick look at the SVIX, which is the negative one-time short VIX futures ETF. Again, SVIX. This one is an inverse VIX linked ETF that seeks to provide daily investment results that correspond generally to the short VIX futures index. As the VIX drops, which we hope it will soon, the SVIX ETF will rise. Now here too, we can buy the SVIX ETF and or buy to open the SVIX May 16, 2025, 11 calls at market this morning as well. We're going to jump back into the markets to see if we can find even more opportunity, even with all of the craziness going on. Please stay tuned for more trade ideas moving forward this week. With that, if you have any questions, comments, or anything I can help with, please reach out at any time. I'm always more than happy to help. With that, take good care, and we'll speak again very soon. Thanks so much.